morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we'll discuss in greater detail, and a lot of them, right? But first up, as always, let's take a look at the Asian markets, which are largely higher in trade today. And across the board, there is green on the Asian screen. Nikkei is shut on account of a holiday. But apart from that, it's Hang Seng, which is sitting absolutely flat, but with some positive bias. Taiwanese index is higher. You have Shanghai sitting with gains of 0.2%. We also have Straits, which is higher by 0.7%. And ahead of the Fed minutes, Asian markets are in a wait-and-watch mode, but on the higher side. SGX Nifty, as a result of this, is indicating that the start for our own markets, where that could be in the green, a 60-point uptick is what this index is suggesting. In the US markets, Wall Street ended Tuesday's trading session higher, with the Dow Jones surging nearly 400 points and both S&P and the Nasdaq Composite closing 1.5% higher. CNBC's Seema Bodhi gets us a wrap of all the action on Wall Street.
Solid gains on Wall Street today after strong earnings reports from Best Buy, Abercrombie Fitch, and American Eagle Outfitters. The Dow closing 1.2% higher, the S&P 500 finishing with a gain of 1 1/3%, and the Nasdaq also ending up 1 1/3%. Lawyers converging on a courthouse in Delaware today for the start of FTX's bankruptcy hearing. Representatives of the collapsed crypto exchange say they are working to bring order to disorder, but warn it's going to take time to figure out where the money went, with what they call a substantial amount of assets either stolen or missing. And Bob Iger is already making changes at Walt Disney. Just hours after returning as CEO, he's restructuring, putting more decision-making back in the hands of creative teams, while also insisting they keep an eye on spending. That's the action here in the U.S. Back to you in Mumbai.
All right, let's now get you some important opinion coming in from Morgan Stanley's Mike Wilson and Goldman Sachs' Jan Hatzius. Listen in.
That's just a different environment than we've been operating in for the last, 30 years, where everything was so predictable, right? Whether it's inflation, whether it's other economic variables, we're going into an environment now where a economic variable volatility is going to be extreme. And that's a difficult operating environment. And, some companies will do a good job of that and some won't, but it creates probably a lot more dispersion, quite frankly, across the stock market. So as bearish as we are on 2023 for earnings, we're actually probably more bullish than most for 2024 based on that thesis.
Well, I think we do need a period of below trend growth, and we probably do need loosening in the labor market. The labor market is overheated. That's why the Fed is tightening so aggressively. But there are also other factors that are important. Income in particular. Real income was very weak in the first half of 2022, but it's now starting to grow again. And I think that's going to be a source of support next year. So you have those two factors. When you put them together, I get below trend growth, but I don't get negatives. The reason why we lifted it is that we have become more optimistic on the income side. And again, real income is a source of support, but the Fed still wants below trend growth. They still want an adjustment, and so they need to lean against it. And that's our expectation. 50 basis points at the next meeting, and then 325s at the first 3 meetings of next year.
Okay, all right, that is some expert opinion coming in. Let's stay with Wall Street and the ongoing tech layoffs. Computer maker HP said that it plans to cut 4,000 to 6,000 employees, that is the employment over the next 3 years. HP is the latest tech company to announce its intent to slim down in the current economic challenges. In fact, speaking to CNBC's Jim Cramer, let us listen into what HP CEO had to say on the layoffs.
Well, when we look at the overall market situation, as I said before, we expect it to be challenging. And also we see opportunities to build on all the effort that we did during the last 3 years to reduce the structural cost of the company. And this is what we have announced today, a program to both reduce the structural cost. We think we can remove $1.4 billion of structural cost during the next 3 years. But also with the same program, we are going to continue to invest in the growth businesses of the company, because we think we need to continue to do that to position the company well for the future.
All right, with that, let us get you the final update on our global market wrap this morning. Gains in energy and mining firms led European stocks to a 3-month high, with the pan-European stocks 600 index hitting its highest level since 22nd of August. The broader European markets meanwhile closed higher, with the French CAC up 23 points, the German DAX gaining 42 points and the British FTSE closing 1% higher. The Organization for Economic Cooperation and Development, or the OECD, said that Europe will bear the brunt of a global economic slowdown as energy prices spike and business activity comes under pressure. OECD forecasted growth in the Eurozone to slow from 3.8% in 2022 to just 0.5% in 2023 before recovering to 1.4% in 2024. All right, that's the global market action. A lot of cues that we have to track, but how will these overnight cues impact our own markets? We have our research team joining in to tell you just that. This is our Power Prep segment, where we'll tell you all about the trade setup, stocks that are likely to be in the news, and the action from the F&O space as well. Hi guys, a very good morning to all of you. First up, Ekta, let me come across to you. What is the market setup looking like today?
Thanks for that. Well, yesterday, in fact, it was positive because the markets did break that 3-day losing streak. We had a marginal net sell from the institutions because, but overall participation is likely to be low from the FIIs. So FIIs net sold close to around 700 odd crores in yesterday's trading session. DIIs net bought around 636 odd crores. Sector-specific interest continues for our market, so we've been reiterating this. So I just want to say that there are a lot of the PSU banks which continue to be in focus. For example, Canara, Central Bank of India, IOB, all of these stocks are either at fresh highs or fresh 52-week highs. Also, shares of new age companies such as Nykaa, Paytm continue to be in focus. So a lot of sector-specific as well as stock-specific action for our markets, despite FII interest probably waning a little bit, as well as possibly the markets being range bound. Now, in terms of global cues, China steps on COVID-19, Brent crude, which is at multi-month lows, US Fed minutes on Wednesday continue to be the big triggers for our markets. For example, China has shut parks and museums on account of COVID-19 fears in Beijing. Now, US closed largely higher. We have Asia, which is mixed this morning. This is all ahead of the US Fed minutes. So the markets are likely to be ranged due to a lack of significant cues and ahead of the Fed minutes. There is also expiry on Thursday. So just watch out for, the lack of volatility, which is a good thing because the India VIX is the lowest that we've seen in 2 years.
Okay, yes, that's right. Ekta, thank you so much for joining us with all those cues. Vaishta is joining us. She'll list out all the stocks to watch out for in today's trading session. Hey, Vaishta, good morning.
Hi, good morning, Sonal. Well, let me start with Siemens, which declared its Q4 FY22 results yesterday post-market. Remember, the company follows a financial year which is October to September. There was a healthy growth on a year-on-year basis, but has missed estimates on all fronts. The revenues were up 12% and coming at 4,600 crores. The CNBC-TV18 poll was at 5,100 crores. The order inflows were up 25% on a year-on-year basis. Order backlog is also strong at 17,100 crores. Moving on, Adani Enterprise will be having a board meeting on coming Friday to consider and approve the proposal of raising of funds. Vartech Babak will also be having a board meeting on 25th of November to consider and approve the proposal for fundraising by way of issue of non-convertible debentures. Nykaa, again, in news because there's been a resignation of the CEO, which is Mr. Arvind Agarwal. And the last is Bharti Airtel. The company's subsidiary Nextra Data commences the construction of its data center in Kolkata, and this is to invest 600 crores in the development of data center. Back to you.
Okay, all right. Vaishta, thank you so much for all those stocks. Now, finally, Nigel is joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. The institution numbers are as flat as can be because the FI and the DIs, they cancel out each other. But what do the FIs do in the F&O market? Well, yesterday there was some short covering. So close to around 10,000 contracts did cover out on the short side. And they added close to around 5,000 long. So this long positioning goes up even a little bit more. On the option side, well, they bought some puts. In case things go wrong, there is some cushion on that side. But the call writing, that was something that was evident in the last 3 sessions when the Nifty was a little bit brittle. Yesterday, those call writers, they had to run for cover because there was big covering of those call writing. And, there was a bit of a reversal because now there was put writing that we see, which I'll view very, very positively. The call writers, well, they had to cover out positions. I said 8,300, 8,400 calls. But keep in mind, the open interest out there is still around 1 crore odd. So bulk of the street is still factoring in that by tomorrow, that's when expiry plays out, still the Nifty will not get past that 18,350 to around 18,400 odd mark. So let's see whether or not that happens. On the downside, though, there was some put writing, 18,200 put, 18,100 put. Good amount of open interest built up out there. 18,200 put, the premium was around 50 rupees approximately. So that's telling you those traders are playing for around 18,150. So let's plug in the numbers. Resistance zone, 18,350 to around 18,400. Going by the call writing and the highest amount of open interest. While, there is some support that's seen at lower levels, that's the 18,100, 18,138, which incidentally is the low that we saw yesterday. The SGX Nifty for starters is indicating that we're likely to start off in the green. Remember, buying the gap up hasn't been beneficial. So look for a dip if you're bullish and then only get into the Nifty. Back to you.
Okay, all right. Nigel, Vaishta, Ekta, thank you so much for joining us, prepping us up for this trading day ahead. Let's slip into a break now. Up next, the telecom sector submits its budget wish list. Welcome back. Still tuned into Power Breakfast on CNBC-TV18. Think big, think clean, think digital. This was the key message from Reliance Industries Chairman Mukesh Ambani to students of the Pandit Deen Dayal Energy University. Addressing their 10th convocation ceremony, Ambani said the revolution in clean energy, bioenergy and the digital sectors will be the next force multipliers that will transform lives. Ambani urged young India to lead the clean and green energy revolution. Tata Group Chairman N. Chandrasekaran also addressed the gathering. He said technology will be key in driving advancements that fuel the next revolution. He further pointed to 5G, Internet of Things and Industry 4.0 as the next big fulcrums of transformation.
Think big. Be an audacious dreamer. Every great thing ever built in this world was once a dream thought to be impossible. You have to own your dream with courage, nurture it with conviction, and realize it with bold and disciplined action. It is the only way you can make the impossible possible. 2. Think green. The clean energy movement is about adopting a green mindset. It is about being sensitive to Mother Nature. It is about inventing means to harvest its energy without harming it. It is about ensuring that we leave behind a better and a healthier planet for future generations. And 3, think digital. In your mission of making India a clean energy leader, digitization will play the role of a force multiplier.
The progress that is being made in technology is tremendous, and it is going to significantly accelerate every science-based transformation in every discipline. 5G technology will provide and serve as the backbone for transformation of many industries.
Okay, the upcoming budget now may not see any new subsidy scheme being launched, though a final call is yet to be taken. Prakshit Luthra files this report.
Well, the government has been receiving recommendations from various quarters, including the industry, and the clear recommendation is don't have any new subsidy schemes. So the view within the government right now is that let's not go ahead with any kind of new subsidy schemes, but we believe a final call could be taken in the next few weeks. At the same time, green hydrogen, climate action will be a big priority area. The government is considering a 31,000 crore outlay for green hydrogen mission, which could be announced in the budget. This could include an outlay for electrolyzers and the rollout of green hydrogen for different sectors. At the same time, there will be a significant allocation for renewable integration to support target for 500 gigawatts of non-fossil fuel energy capacity by 2030. Mission Life will be a big priority according to sources. Remember, Lifestyle for Environment. This was a mission launched by Prime Minister Modi and the UN Secretary General Antonio Guterres in October. Recently, the centre has published a list of 75 climate-friendly practices under the mission Lifestyle for Environment. There are specific outlays for different ministries for implementing this program that are being discussed right now. We believe that the budget will put a lot of focus on how this mission will be rolled out over the next 2 years or so, and the government would like this rollout to be on the lines of the Swachh Bharat mission as well.
All right, that's the big theme, and of course we'll keep tracking that in this budget itself. And let's stick to the budget now. The telecom industry has submitted its budget recommendations to the Finance Minister. Ashmit Kumar filed this report last evening.
Well, the budget may be a couple of months away, but it seems that the telecom companies are quick off the blocks to relay some of their concerns to the finance ministry. In fact, we understand that a few representatives from the sector had visited the finance minister yesterday and shared some of those concerns. There are 5 key issues that have emerged. The number one is, and this is not a new demand, the telecom sector is demanding that there be a refund of accumulated input tax credit of 32,000 crore rupees. The sector says that at a time when the sector is looking at a huge capex, this infusion of 32,000 crore rupees will be critical and will work wonders for the sector, for the industry. The number 2 demand is that for as far as 5G rollout is concerned, critical infrastructure and critical equipment has to be imported. That currently sees a levy of customs duty levy of 20%. The sector is demanding that be cut to nil, to zero, and that is the second key demand. The third is abolishment of the use of contribution. What the telecom sector argues is that the use of contribution should be done away with, at least till as far as the use of fund is not exhausted, and that the license fee should be brought down from 3% to just 1%. The number 4 demand is removal of GST as far as government dues are concerned. The telecom sector is saying that no GST should be levied on dues that are paid to the government in the form of the license fee, the SUC, or even spectrum payments, that these payments, GST, should be abolished. And finally, there should be a grant of input tax credit, especially on critical equipment that is mounted on telecom towers. These are 5 demands that the sector feels will be critical in the months to come as far as 5G rollout is concerned and as far as digital infrastructure of the country is concerned.
Ashmit, thank you so much for joining us with all those important details. And as we slip into a break now, a quick programming note to the viewers. To fully commit to the cause of bridging the gender parity gap at the workforce, CNBC-TV18 is all set to lead charge with a one-of-a-kind mega initiative, Future Female Forward, the Women's Collective, presented by HSBC. The initiative will be officially launched through an exclusive on-ground event on Friday, November 25th, in the presence of Shireen Bhan, who is the managing editor CNBC-TV18, Mr. Hitendra Dave of HSBC, and other women leaders of India Inc. Also in attendance will be some of the most influential voices from the business, entrepreneurship and entertainment spaces. So don't forget to tune into CNBC-TV18 on Friday, November 25th, 5:30 p.m. onwards. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. It's time to talk commodities now. A lot of action in that space. Manisha Gupta is joining us with all the update. Hey Manisha, good morning.
Morning, Sonal. Thank you for that. Well, we have seen the crude oil prices jump up by 1.5% for both the varieties overnight. This is after the API says that there is a decline in U.S. crude inventories by almost 4.8 million barrels. Apart from that, not just Saudi Arabia, which has been saying that OPEC and allies will stick to output cuts and not increase output. Apart from Saudi Arabia, you have these kind of statements now coming in from UAE, Kuwait, Iraq, Algeria, who are all denying any output increase talks, and that seems to be supporting crude prices also. Apart from that, what is capping too much gains clearly has been the global recession worries and China's rising COVID cases. Beijing, which is the capital of China, now has shut parks, malls, museums, and there are more testings happening in other Chinese cities as well. So this is something that will continue to hamper the risk appetite that we have seen happen in various asset classes. Same is the case for metals as well. Smart rebound here as well overnight, but the markets are unsure on what China will do forward, so that uncertainty is keeping the prices choppy.
Okay, all right. Crude oil prices continue to be in focus and other commodities as well. Manisha, thank you for joining us with all those details. With that, let's shift focus to the world of football now. 2 days into the World Cup and we already have our first upset. Saudi Arabia got the better of tournament favourites Argentina in last evening's game. The Saudis conceded first but scored 2 and defended stoutly for a historic win. Such was the impact back home that the Saudi government has announced a public holiday for today. And in the late kick-off last night, defending champions France started their strong note, becoming the first defending champion since 2006 to start their campaign with a win as they beat Australia by 4-1. So exciting times ahead for the Football World Cup. But with that, let's take a quick look at what the Asian markets are doing, largely in the green now. And that is something that is expected to continue after that strong handover that we got from the Wall Street. Hang Seng too has actually recovered quite a bit from the lows. It's up 63 points versus a flattish start that we saw earlier. SGX Nifty is indicating a strong start for our own markets. And with that, we'll take your leave on this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next with all the action.